All right, TJ, why not go ahead and introduce yourself while I try to get this the slideshow going?
Hey guys, my name's TJ Bencho with Aurora Real Estate Investment Services. What we do is we provide hands-off real estate, turnkey solutions. We allow you to continue to live the life you live today while investing in real estate. We bring investors from all over the United States of America and all parts of the world to invest in Pittsburgh, PA real estate. We're a family-owned and operated business. In a little bit when you're seeing our slideshow, you'll see a few slides of myself and my wife and my son, my aunt, my grandmother, my father and his wife. We're all part of the business. We have probably over 180 to 100 out-of-state investors now, and out-of-country investors combined. And we offer anywhere from a 13 to 20% return on your investment. And we do all the work for you. When you come to us, we build a relationship. You tell us what you're looking for. We go find it in regards to the type of property. Once we find it, we send it to you. You decide if it makes sense for you. If it does, you buy it. We do the renovations. I'm a licensed contractor. We also facilitate the property management. You could be into a single-family residence for as low as $35,000, and we'll talk more as we go on. I see the slideshow's up now.
Okay, thanks, TJ. So happy New Year, everyone. For those of you that are joining us for the first time, I will go ahead and introduce myself. My name is Adero Koye, and I am a CPA and an active real estate investor. And I am the founder of the Wealth Building CPA, and we're the ones that are bringing you this webinar tonight. TJ and I, we attend several REIR, real estate investment clubs, and we realize over time that there's a lot of information that is lacking out there when it comes to investing in real estate and the financial aspect of it. So we teamed up together to bring you monthly webinars. And these monthly webinars are pure education. We're going to give you 100% education. There's no pitching, no anything we tell you about ourselves, but our clients will speak for us. So today we are going to be covering the Wealth Building program. And just to tell you a little bit more about myself, I own real estate investments across 5 states in the Eastern Coast, and I've helped over 5,000 people like you prepare their taxes both online and offline. And my greatest joy comes from helping clients, friends, and associates become free of financial stress. Okay, we're going to keep going here. It looks like the slide is going a little slower today. I have 18 years of experience as a CPA and 11 years of experience as a real estate investor. So with this combination, it is a great pleasure for me to bring these products to you today. And this is the Bencho team. I'll go ahead and allow TJ to introduce the Bencho team.
Well, as you see in the first picture, you have Tom and Amy, who's my father and my business partner, and Amy is his wife, who is our in-house realtor. You see below them Betty, which is my grandmother. She's our office manager. To the right, you see Valerie. She's our bookkeeper and our office professional. And above that, you see TJ, Thomas, and Jen. I am TJ to the left, my wife Jennifer in the middle, and my son Thomas to the right. And there's also on there, should be on there, is my cousin Nick, whom I'll add another time. He's a strong part of our team. So as you can see, we're a family-owned and operated business, and we also have 5 contracting crews that handle the renovation of our projects.
Okay. Can you tell us a little bit more about the Aurora Advantage? That's what I call it. That's the name that I gave it. Why would people want to come to you?
Well, Bear, the reason that people come to us from all over the world is that we focus on building relationships with our clients. There are other wholesalers out there. That's what people would call what we do. But our approach, where we do not have a backlog of properties that we have under contract or have renovated and are trying to sell to the investor, allows us to actually build a very strong relationship with our clients and then tailor fit our search to meet each specific investor's needs. Therefore, if an investor wants a 3-unit, we go search for a 3-unit. If an investor wants a 10-unit, we go search for a 10-unit. On the other hand, if we had a backlog of properties, we would have to sell them what we had, not what they want. I find that that's the number one reason. Well, that's one of the main reasons people come to work with us, besides the fact that we're in Pittsburgh, which has been ranked America's most livable city 2 years in a row. Yahoo just came out with an article today that ranked us the one of the top 5 cities in America for long-term investment, real estate investment, and just the national media has a lot to say about us due to our unemployment rate being 2% below the national average. And we focus on a buy and hold strategy, which I know you're very familiar with, Aber. And due to that buy and hold strategy, there are a lot of tax benefits that go along with that. And that's the bulk of what I plan on speaking about tonight, and hopefully educating some people, is the tax benefits of owning rental real estate.
Okay. For some reason, we are having problems with our show, so I think we're just going to keep moving here.
Okay.
Yeah, so TJ, why don't you just go ahead?
Okay. So we're going to speak about the tax benefits of owning rental real estate, as opposed to maybe stocks or bonds, or opposed to not doing anything proactive with your money, or as opposed to maybe wholesaling, flipping, other things of that such. Now, there's several reasons, main reasons. Passive residual income. Money comes to you every single moment without you working for it. This equals freedom and time and security. Appreciation. In the long haul, the value of real estate will always increase more than it decreases. This is simply a function of supply and demand. As the property increases, so does your net worth. Retirement. I know that real estate is my retirement. To pass on the wealth. By teaching your children or anyone else whom you choose to pass your real estate to how to properly manage your real estate, you can be assured that they will experience the freedom of time and money that real estate offers when you pass your real estate on to them. I plan on passing all of my real estate on to Thomas and any other children we have. And that's
very important, TJ, because one of the things that the reason why we started out talking about owning rental property, and rental property can be single family homes, it can be commercial, it can be mobile home parks. For every real estate investor, that is your ultimate goal. In my previous webinars, I've taught that there's about 13 different real estate strategies. You can start out wholesaling and rehabbing and flipping and lease options. But ultimately, if you're going to build the right wealth building plan, you eventually want to end up owning rental property, because that's the only way you can have passive residual income. And the reason why I'm teaching you about having the right wealth building plan in 2012, because ultimately you want to get to the point where you have residual income, meaning money that does not depend on your active labor. It comes in whether you work or not. And that's why we started the whole presentation about having a comprehensive wealth building plan by zoning in on the real estate strategy, which is owning rental property. Later on, you're going to see when I make my presentation that there are 7 stages to building a very successful wealth building program, and one of them is investment property purchasing. And that's the reason why we're focusing on that strategy, because ultimately there's a saying that all roads lead home. All roads to real estate investing, whether you're a wholesaler, rehabber, you do lease options, short sales, foreclosure. Ultimately, you want to get to this place where you own rental property, whether it's commercial or single family, so that it can give you passive residual income. Go ahead, CJ.
Yeah, I appreciate your words, Bear, and it's a beautiful thing. It's a beautiful thing to, be in Atlantis, Bahamas for 7 to 10 days and not have to worry about if you're using up all your vacation time or if you have money coming in, because that whole time you're on vacation, your rental properties are still making you money.
Yes, exactly.
And one of the benefits that are rarely talked about that we are going to speak about today is the tax benefits of owning rental real estate. One of the tax benefits that I'm going to speak about is depreciation. Even if the value of your home rises, you get to take an annual tax deduction for your real estate. The actual cost of your house, apartment building, or other rental property is not fully deductible in the year in which you pay for it. Instead, landlords get back the cost of real estate through depreciation. This involves deducting a portion of the cost of the property over several years. Therefore, you're not just making the rental income, you're making money because you're paying less taxes. The next point that I would like to speak about is repairs and improvements. The cost of repairs and improvements to rental property, provided that the repairs are ordinary, necessary, and reasonable, we'll let the IRS figure that out, are fully deductible in the year in which they are incurred. There's a difference between repairs and improvements. Once again, I'm speaking about repairs right now. The cost of repairs are fully deductible in which the year they are incurred. Good examples of repairs include repainting, fixing gutters or floors, fixing leaks, plastering, replacing broken windows, etc. Improvements are depreciated over time. Improvements are defined because they add value to the property. They prolong the useful life or adapt it to new uses, such as turning a single family into a duplex and other things of the such. Maybe adding a bathroom and things of that such. But no matter what, the work you're doing to your rental property gets taken off your tax return, along with adding value. Therefore, you're gaining net worth and you're paying less taxes. You can't do that with stocks or bonds, can you, Bear?
Definitely not.
Another, tax deduction that's a huge benefit. If you do have a mortgage, you get to write off the interest on that mortgage. Pretty much most people know that, but you get to make money and write off the interest. Most people don't calculate this when they're figuring out their return on investment. It's sort of a bonus, but if you really want to look at the overall picture, I do recommend calculating this in. Even if you do not have a mortgage on the property, you can deduct interest on credit cards used to purchase goods or services used in rental activity. A lot of people don't know that. And I'm going to go into a little side note here that's very important. One of the reasons I love doing these webinars with a bear, you do not have to remember all of this information. This is just the overview of the information. It goes so deep, the amount of money that you can save on your taxes from rental real estate. I highly recommend, if you're doing your own taxes now, and you own rental real estate, or if you're going to own rental real estate, that when you do, you get an accountant who is a real estate investor themselves and who understands real estate investing like a bear. Because that individual is really focused on saving themselves money. Therefore, they're going to know all the tax deductions that are available to use with you. Would you agree with that, Bear?
Of course, and that's one of the reasons why, we're getting a lot of clients and our business continues to grow, because I've realized that there's not a lot of CPAs like me out there where you're bringing to the table a wealth of experience as an investor myself. I mean, I have to take these deductions from my properties that I own, but also the business side of it. And, better yet, wanting to make sure that, my clients are getting the best loopholes possible, which is the main reason why they invested in real estate rather than anything else.
And guys, one of the beautiful things about working with Aurora Real Estate Investment Services, you buy these properties and they are not rehabbed yet. You pay for the renovation. Due to the fact that you go through that process, you're getting a lot of equity in the home, but at the same time, you're getting a lot of write-offs for the renovation cost. I'm a licensed contractor. I hand my invoice to you, and you get to give that to your accountant, and he gets to write that off over years. So now you're not just getting your rental income with us, you're also getting those tax deductions. Another tax deduction is your insurance. You can deduct insurance premiums you pay for almost any insurance for your rental activity. This includes fire, theft, flood insurance, as well as landlord liability insurance. And if you have employees, you can deduct the cost of their health insurance and workman's comp. Another expense is travel. You can deduct your travel. I use this quite often, whether you're local or whether you're investing in Pittsburgh. For local, you keep track of your gasoline, your upkeep, your repairs. You have to keep track of your mileage. There's formulas for your mileage, which I'm sure a bear knows those formulas. For overnight travel, or if you're traveling long distance, same thing if you drive, but if you fly, you have your travel, your flight itinerary and rental car. And one of the benefits is sometimes you can mix a little bit of business travel with pleasure travel. And, you get a little bit of kill two birds with one stone. Any input on that, Bear?
I agree, and I do that a lot because I'm a real estate investor and I'm constantly looking for opportunities and deals. Whenever I travel, I always want to check out the area, find out the statistics, the demographics, the employment growth rate, what's going to be happening in the future. And if it's possible, while I'm on that trip, I try to visit a couple of properties. By doing that, this is a business travel. So, usually I tell people take vacation where you can have a business deduction. And that's what I do, where, we get to visit several states during the summer with the kids. And while, we're on vacation, I usually check out the area. Even if it's not for a tax deduction, but it makes good business sense. Because you never know what area that you will come across that is the next best thing in terms of an area or neighborhood for a real estate investment.
And this one is beautiful. You can deduct legal fees. You can deduct fees to pay your attorneys. Hopefully you really don't have to pay any. Your accountants. So you can deduct the fees to pay the person who's going to help save you the most money on your taxes. I think that's beautiful. You can deduct fees for your property management companies, for your real estate investment advisors, and other professionals. They're operating expense, and as long as the fees are paid for work related to your rental activity, it's all legal. I know we don't always agree with what the people do on Capitol Hill, but for rental real estate, they've really put some things in place to help because, let's be honest, a lot of them own rental real estate. You can deduct your home office. You have a home office. You keep track of the rents that came in. You keep track of your rental statements. You use your internet for that, your phone for that. That's all tax deductible. You can unexpected losses. If your rental property is damaged or destroyed in a sudden event, or if there's a theft, those are tax deductions. As long as you have the right accountant, they know how to look at them. They know all the tax laws. Employees or contractors, anybody who does any maintenance work for you, anything of that such, which with my company, I actually head up all your maintenance work. I get your maintenance work to where it has to go, and you get all the invoices directly from me. So to summarize, review your portfolio, get your money out of savings and checking and accounts, 401ks, IRAs, stocks, bonds, etc., that are not producing you at least 10% return, and the similar tax benefits as mentioned in this presentation, and buy and hold real estate to rent. I don't mean that to get it all out. I mean, you want to diversify your portfolio, of course, and that's what a bear is going to speak to you about, and you want to go about it in a strategic manner. But, I find for me, my most productive money is invested in rental real estate, and I try to put as much as my money as logically possible in rental real estate. And, here at Aurora Real Estate Investment Services, we are here to help you do that. I know you're busy. We know you have lives. Owning rental property takes a lot of time and energy, but we take that time and energy and we use it, and you get to continue to live the life you live today while growing your wealth through real estate. So thank you very much, and I'm really looking forward to hearing what a bear has to say.
Thank you, TJ. That was excellent. And like we said, the reason why we started with that first is because all real estate strategies end up in owning some property that you can hold. If you can hold it, then it gives you the opportunity to build up residual income. I encourage you to stay till the end of the call because we will open up the lines for questions, and you can start typing any questions you have in the chat box. If you have any questions, you don't have to wait until the lines are open. You can start typing them in. That way you don't forget. So I'm going to talk about 8 stages of having an ultimate wealth building plan. So we're just going to go through each stage one at a time. And there's a reason why we want to have these stages. Now, the Wealth Building Program is a 12-month training program that takes you step by step through the steps required to run a successful and efficient real estate business. And the reason why I did that is actually came in response to what some of my clients requested throughout the year, because over the years being part of the real estate club, I realized that most real estate investors, want help with tax planning, tax preparation, entity structure in business meetings, investment property analysis, and all those things. And we actually came up with this ultimate wealth building plan together. And so this helps you a lot because it helps you to realize that this is not just something that a CPA came up with or TJ, that helps us with the investment analysis. We all came up with this together, all the real estate investors, because we realize that this is ultimately what everybody needs. And we work with you on all aspects of the wealth building plan. That's the good thing, because some of the greatest mistakes that I've seen is where you don't have an integration of services. Your lawyer is telling you one thing when it comes to entity structuring. Your CPA is telling you one thing when it comes to tax planning. Your real estate coach is telling you one thing when it comes time to purchase the property. Your family's telling you something different, in terms of your needs. And then with retirement, you have different goals. So the reason why we call it the ultimate wealth building plan is because it takes into account all aspects of wealth building. So we're going to start with stage 1. Stage 1, you need to do a financial needs analysis. A lot of people overlook this. They think it's not important. I have a lot of people come to me and say, hey, Abera, I'm ready to invest in real estate. I have $50,000, or I want to do wholesaling, and I'm going to take some real estate courses, and I'm ready to get started. And I said, have you filled out your financial needs analysis questionnaire? The reason why this questionnaire is important is because I want to see where are you right now. We need to paint a picture of where you are financially right now and where you need to be. That way we can come up with a plan for the rest of the wealth building program. Because if I don't know where you are and where you need to go, I'm not going to be able to create the roadmap. So it starts with doing a financial needs analysis questionnaire. Most of my clients that have signed up for the ultimate wealth building plan, the first thing that we send them is that financial needs analysis, because that is the starting point to getting a lot of things done. During that analysis, and I also do a phone interview right alongside the financial needs analysis. I want to know, have you filed your tax returns? Do you have an entity structure? Do we need to restructure? What kind of time do you have? What's the family situation? What are your goals? What real estate strategy do you want to pursue? So during this stage, we're able to gather all the information. Do you have a lawyer you're working with? Do you have a financial planner? Do you have a real estate coach? Do you own any properties? Once we're able to answer all these questions, then now we can sit down and say, okay, let us come up with a plan that is tailored and that is unique to you. And then the next thing that we look at is stage 2, which is tax planning and preparation. During this stage, we would review your tax returns for the last 3 years, so we're looking at 8, 9, and 10. We review it for accuracies, inconsistencies, audit flags. I cannot tell you how many times I've reviewed clients' tax returns and seen potentially overlooked deductions or things that their previous CPA or preparer or they did themselves that could create an audit trigger. It's not like you can't get the deduction, but there's a way that you prepare it, and there's a place that you could put it on the return, and you're waving your hand at the IRS asking them to come and audit you. So we kind of look out for those things during the tax planning and preparation stage. And then we also take into account that you're not wasting any deductions and that you've made all the elections that you need to make. And then also during this stage, we determine what taxes need to be filed. You know, if we need to file the current year, do we need to file the prior year? Do we need to look at any, you know, are you going through any audit? Are you up to date on your personal property tax returns for those that own a business? What about the annual filings for the different states? These are, at this stage, we kind of take care of what we call compliance and in preparation. And then the next stage, we look at entity structuring and formation. And entity structuring, as everybody knows, is the use of a legal entity to give you asset protection and mitigation. But one of the things that we've seen over the years is sometimes a lawyer is only looking at the legal liability aspect. But if I know that if I were to poll everybody that is on this webinar tonight, you know, I say, you know, give me a show of hands of how many people here have ever been in some kind of legal battle. You know, and then I say, give me a show of hands how many people have ever had to pay tax. I'm sure we're going to say that people are 100% more likely to pay taxes than they are to get into legal liability. But 90% of the time, what you're taught out there, that your entity structure should really look at asset protection. And that's one of the reasons of looking at a wealth building plan, because we not only look at the legal aspect of it, we look at the tax aspect of it, and then we also look at the ease of compliance. There's a lot of clients that, you know, have good legal liability protection, good tax reduction strategies, but because they don't know how to comply with the different rules for each entity, they end up losing that entity. I can't tell you how many clients have come into my office and say they have an LLC, and then we go to check the certificate of good standing, and the LLC has been forfeited. It does not exist. It's not because they didn't have the legal liability protection or the tax reduction, but because they did not know how to be compliant. So this is what we go through during the entity structuring and formation. Also during this stage, we look at an existing entity to see if we need to restructure it for tax reduction, or if, you know, the client has decided that they're going to be pursuing a different real estate strategy. And then the third stage is where we actually do business registration and bookkeeping setup. You know, once we decide on what the right amount, what the right entity is, that's going to give us all three, you know, legal protection, tax reduction, and ease of compliance, we would actually help you set up that entity in all 50 states. We're equipped to set up LLCs and set up S Corps, C Corps in all 50 states. And once we do that, we get the EIN number from the IRS, do the operating agreements, do your bookkeeping, chart of accounts, and then we discuss the operations procedure for that. Now, I want to, you know, go through with you the stages that we go through in doing business registration. And the reason why I go through this is because some people say, you know what, I want to do my LLC myself. It's not that complicated, you know, but I want to make sure that if you're going to be registering your own business yourself, that you are going through these stages. You know, you're going through these stages on your own, and you're not necessarily getting yourself in trouble because you missed any one of these steps. So the first thing is, once you get the registration form, you know, you submit it to SDAT. Please make sure that you don't have your name or your home address anywhere on that article of organization. It's very, very important. There's a lot of mailboxes, et cetera, that can give you a unit number, not a post office box, so that you can use it. And it doesn't cost that much. We offer that service to our clients as well for $100 a year to use our office as their business address, because anybody that goes on the public record will see your entity. And right now with, you know, the Google Maps and whatever, somebody can type in that address and see that this is a home address. You also don't want your name anywhere on there. And that's why sometimes we encourage you to use another person as the manager member of the LLC. Now, once we receive acknowledgement from SDAT, you know, we go ahead and get your EIN number from the IRS. You know, again, people think that this is an easy thing. Oh, it only takes 5 minutes. Yes, but you want to make sure that you are giving the IRS the right kind of entity that you are. You know, I've seen a lot of people go on there and say that they're a partnership, and then they don't realize that they need to file tax returns because now you've said you're a multi-member LLC or you're a single-member LLC. There are certain questions that they ask on there that may look like it's not important, but it's very important because at the end of the day, it determines what your compliance requirements will be with the IRS. So once we get the EIN number and the acceptance of filing, you would open up a business bank account, and then we draft an operating agreement. Our operating agreements are usually 121 pages, and the reason why we have it that way is that it gives you all the protection you need tax-wise, legal-wise, and compliance-wise. And then the fifth stage, which is very, very important, is we do a cash sweep. A lot of real estate investors and even myself, prior to establishing your bank account, you've already spent some money. So what happens to the expenses that you incurred prior to forming the entity or opening up the bank account? This is where we do a cash sweep to move those income and expenses onto the bank account for the business. And we call it a cash sweep because the money goes in and comes back out. That's the reason why it's called a cash sweep. That way, if you're ever dealing with the IRS or anybody, you can just present the business bank statement without having to present your own personal bank statement, because sometimes the IRS will treat that as commingled. And then after that, we look at bookkeeping. How are you going to keep your books? Are you going to start out with Excel or Quicken or QuickBooks? And then in step 7, we want to do a yearly review and annual filing. You need to review your entity structure and your business registration at least once a year. Just like you file your taxes once a year, you want to do your entity structure and review once a year. It's very important. And the next stage that we look at is the business analysis meeting. Most privately held businesses, I had the opportunity for about 3 to 4 years to work for one of the largest real estate investors in the area. I was a consultant for 4 years. They have an alternative board, and a board that can come in and advise them on what to do. But guess what? As a real estate investor, and most of the clients that I come across with, it's a one-man shop. You're a small business. You're the only employee of that business. So sometimes you're the one that's making all the financial decisions, all the administrative decisions, all the investment decisions, and sometimes it's hard to take an objective look at the business. So the whole goal of this business analysis meeting is we act as your CFO for one day. And at that phone call or at the in-person meeting, we want to know how is your business doing. Okay, you told us when we did the financial needs analysis that you want to be a wholesaler, or you want to do rehabbing, or you want to do commercial real estate. Where are you? We look at your budget. How much have you spent? How much money has come in? And then we try to revise your business strategy, your business plan to fit what we think is going to help you to ultimately build wealth. So we usually have our business meetings usually at least once a year, May, June. I have my clients who signed up for the wealth building plan come in and, and we sit down and we talk about these items because it's very, very important. And then the next stage that we look at is the investment property purchasing, which is what TJ has already covered in detail, the benefits that you get, from real estate investing. But if you have not yet started investing in real estate, or you have, let's say you're a wholesaler and you're ready to move into rehabbing or rentals, during this stage, we discuss the different real estate strategies that are available to you. And once you decide on the real estate strategy, then we have to talk about how you find the property, how you fund it, how you're going to farm it, or how you're going to keep it. And we have a team of investment property experts that will assist you in finding the right property that fits your real estate strategy. That's why Aurora Investments and the Wealth Building CPF come together, because ultimately we know that the whole goal of the ultimate wealth building plan is to get you to the stage, to the point where you're buying and keeping real estate. And stage 7, when we look at stage 7, we look at retirement planning. Everybody says they want to retire comfortably. Everybody says they want to retire when they're 40. Everybody says they want to retire at a certain age. What we do at this stage is we take a look at what you have based on what you filled out on the financial needs analysis. And then I take a look at the fact that you want to be a real estate investor. Most financial planners out there will not take into account the fact that you want to be a real estate investor. They look at that as a risky alternative vehicle that they don't deal with. We're not scared of real estate investment. I love real estate. So I kind of act as your financial planner during this stage to make sure that everything in your portfolio fits perfectly. You know, everything in your portfolio fits perfectly. And one of the things that we started doing is creating some type of hedge fund for real estate investment. And when I say hedge fund, what I do for my clients is, okay, this is how much money you want to put into real estate. This is your real estate strategy. Can we set up an alternative vehicle, maybe a maximum funded life insurance, or, you know, setting up some kind of annuity that gives you a hedge so that if anything happens, you know that this is your fallback position. This is what we come up with when we do the retirement planning. And then the last stage of the ultimate wealth building plan is when we do the year-end tax planning. And, you know, I tell my clients that tax preparation, which the deadline is April 15th, is not really tax planning. It is merely just tax compliance. And the IRS wants you to think that April 15th is really your deadline, because guess what? If you have that in mind, you're not going to plan ahead of time. If you were going to get any kind of deductions, you need to put those things in place by December 31st. So I'm training my clients to realize that April 15th is not actually your deadline. It's your tax filing deadline, or your tax savings deadline is actually December 31st. So I have my clients November, December sending me all their information so that we can see where things are before the year runs out. And getting a head start in September, October, November could make you a lot happier in April. And, you know, one of the jokes I have out there is you either pay the IRS, pay the tax preparer, or pay a qualified CPA to come up with some tax reduction strategies. Either way, you're paying for it somehow. You know, either pay for it in a higher tax liability because you didn't do any planning, or you pay a preparer who is now looking to do some kooky and shady things on your tax return that's going to get you audited, or you work with a qualified CPA and get this done ahead of time. So in a nutshell, those are the stages that we go through under the wealth building program. And for those of you that are interested, I have a question here. For those of you that are interested, the main thing that we want you to know is that when you join the program, you will have an initial phone consultation to determine, you know, which of these stages need to be implemented. Sometimes I have a client that comes in, and we don't necessarily need to start with tax preparation. Maybe we need to start with entity structure, or maybe we need to start with, you know, the business meeting. Maybe we're ready to purchase a property. You know, maybe we need to look at setting up a solo 401k plan or a retirement plan. So we make it customized. We customize and personalize it for you. And you're able to ask me. Most of my clients will tell you that I try to make myself available to answer any questions. I don't care how odd or weird the question is. That's why I'm here, to research any oddball question that you have. So in a nutshell, that's what we have for the Ultimate Wealth Building Plan. So if you have any questions, please feel free to start typing them. We are going to open up the lines now for any questions that people have. You know, we're pretty much done, and we're going to be here for the rest of the evening to answer any questions. So simply type in your question in the question box, or you can go ahead and ask the question live on the line.
One, can you hear me, Bear?
Yes.
Wonderful presentation. Very, very informative. I think your program is, as you know, I told you several times, is just very, very proactive, and I definitely recommend it.
Thank you. All right. Do we have any questions? Well, CJ, I think, do you have any additional things that you want to talk about while we open up the line here for questions?
I really just want to thank everybody for their time this evening, and you know, I just already stressed the importance of owning rental real estate, and I think that if nobody has any questions, I really can't add anything else to that. I want to keep it as educational as possible and not talk too much about Pittsburgh, so it's hard for me not to do when I start talking.
Oh, by the way, for those of you that are on the call that don't know, I actually own property in Pittsburgh, and that's been one of my best performing rental properties. And that's, actually one of the things that brought TJ and I together was just talking about Pittsburgh and the return on investment that you get by being over there. And,
okay. I get in the car.
Now. Okay, I want to open up the lines, but I'm going to ask everybody to please respect the fact that we're going to open up the lines in case people have questions. So please, you can mute yourself if you don't want to, if you don't want to be heard. But we're going to go ahead and open up the lines right now. While I wait for some questions to come in, please keep in mind that I want you to keep in mind that if you have anybody that you paid over $600 for services, that you do need to issue a 1099, and that the deadline is coming up very shortly. January 31st is the deadline to issue that 1099. So you want to make sure that you get that done. We sent an email. I hope everybody got it. Also keep in mind that if you're receiving any kind of credit card payment through a merchant account or any account like that, you want to be aware that you're going to start receiving a 1099-K, and that needs to go on your tax return. I also want to talk about the fact that I noticed that a lot of people that own LLCs don't realize that they are supposed to file the annual property tax return every year. So the annual property tax return needs to be filed every year. You need to find out the deadline for the state that you're in. For Maryland, it's April 15th. If you're in D.C., it's June 15th. And if you're in Virginia, it's whatever your anniversary date is. Now, if you don't file that personal property taxes, your business will not be in good standing. So if you have any real estate deals out there and you want to be putting offers in the name of your LLC, they can check and see that the LLC is not in good standing. So you definitely want to make sure that you are, keeping abreast of your compliance filings and all the things that you need to do for your real estate to keep it in good standing. Okay, I see a lot of people here. So is what we presented, I think everybody enjoyed it so much they actually don't have any questions. We kind of wowed you. I don't see any questions coming through. The line is open. If you have any questions, please feel free to ask it at this time. Okay, there we go. Okay, somebody's saying there's an echo. I think we've kind of fixed that. And TJ, somebody said, go Giants.
I am actually rooting for the Giants because I'm not a who is that? Who typed that?
That was Chris.
Chris McCartney.
Okay. Yes. And then there's a question about if we have any referrals for investor purchases, for investment purchasing.
Do I? Yes, I do work with.
Yeah, for investment purchasing that is like more than 4. I guess maybe it's more of the financing.
As far as referrals, if they're looking for, I do work with associates who bring me business, and I pay a referral fee.
No, I think they're asking for if they want to purchase property that's more than 4 properties.
More than 4 units?
Maybe a multi, so yes, I'm moving into more of the multi-unit.
Yes, we do have multi-unit buildings. Like I said, we specify our search for each investor, so you would contact me, and we would discuss your interest, and then we would let you know what type of properties we have in Pittsburgh that can suit your needs. We work with investors in all ranges of property.
All right. I have a question here with an exclamation mark. How much will all this cost? Well, if you want to know how much it costs, usually our wealth building program, we have two wealth building programs. We have A and B. Wealth building program A is at $14.95, and you just get the tax preparation, the year-end tax planning, and the unlimited consultation. If you want us to assist you through all the stages, it's actually at $19.95. But if you've been on our mailing list or you came as a referral from a real estate club or another client, you get it at $16.95. So that's how much we charge for the wealth building program. There's another question: do these rules apply to a nonprofit as well? Absolutely, these rules apply, even though the tax filing for a nonprofit is a little bit different. These rules apply as well. I have another question: how much will it cost? Another question is: someone doesn't have a lot of money to get started with your program. What is the cost, and how long do you expect operating agreement to take to complete? Usually, we have a 121-page operating agreement. It takes, because some of the language is standard, from person to person. So it can take anywhere from 30 minutes to an hour, simply because I want to also review it with you and discuss the very important aspects of the operating agreement. So I'll say about 30 minutes to an hour to complete that. And then for those that don't have a lot of money to invest in my program, we also have a pay-as-you-go. If you feel that at this point maybe you just need tax preparation or you need entity structuring, we can give you a pricing just for that. It doesn't have to be where you sign up for the whole program. You can do a pay-as-you-go plan. We have payment plans for those that need it. One of the things that my clients will tell you, I never turn down a client because of fees. I want you to take advantage of what we have, and we can work out the fees if we need to, because I know I can stand behind my service, and I know that when you see the value of our services, you will send us referrals. I have another question. Are nonprofit organizations required to file an annual report? Absolutely. As long as you're registered with your state, you're supposed to do that annual filing. Does the 1099 include the property management company? No, because the property management company actually collects money and sends it to you, so they actually should be sending you a 1099. And not the other way around, because they get the money from the tenants and send it to you. So they will be sending you a 1099 plus a statement of account of, how much rental income came in and all the expenses as well. And then let me take all the questions that are on chat, and then I'll open it up to the lines again. I know I heard somebody trying to get my attention. Ebera, if we haven't earned a lot of money in our investment yet, how much will we need to be looking to pay to get your professional services? Just give me a call. We'll work something out. Like I said, we never turn down a client because of fees. For me, I'm a Christian, and because I'm a Christian, I want everything that I do to come out in that, and that means that I have to be kind and caring. So I'm not necessarily going to turn somebody away because of the fees or because you haven't made any money. We will work something out. And I know that the other clients who see value in what I do are able to afford our services. Somebody says, I've tried to start investing but haven't been able to do that. So, TJ, do you want to take this? She said she's been attending investor meetings and she's tried to start investing, but she's not been able to do that. What kind of advice would you give to somebody in that situation?
Well, I would need to speak with them. I run into that a lot, and that's more of a one-on-one consultation type of thing where there's obviously no fee. I work with a lot of investors and just kind of help advise them and coach them along. I'm not a coach, so I don't charge any type of fee. But there's really many factors that could go into that, Abera, as I'm sure you know. There's hurdles into getting into real estate. Some's fear, some's not having the capital, and some's just not knowing how to get the capital. I have a feeling that the most common hurdle is not being able to obtain the capital to invest.
Yeah, actually, that's the next question here, so you can do those together. The lady said, I keep getting pushed back every time I try because I don't have any credit or money to start investing. I'm a stay-at-home mom, so once I send my kids to school, I have about hours to do something from home.
Okay. Well, that's great. I wonder if she would tell us where she lives. The reason I ask that is I wonder if she's attending real estate investment meetings, and that is a very big part of it, but it's not the only part. A lot of my investors, I have a lot of first-time investors that work with me. Some of them have their own capital, and some of them don't. The ones that don't have their own capital, I've kind of coached on how to get capital. What you first do is you align yourself with somebody like myself who has a good product that's very reasonably priced to get into, but you also make yourself very knowledgeable. You speak with me, you get my emails, you call me, you ask me questions, you do a lot of research. I'm just using my market, for example, because that's what I do, but you educate yourself on Pittsburgh. I educate you on Pittsburgh. Then you go and you talk to people in your family, in your friends, in your network about, hey, what is your money doing for you? And you find the people that have their money maybe sitting in a 401k or an IRA that's not making them much money right now, and you work on getting them to put it in a self-directed IRA, and you offer them a 5 or 6% steady return. They're the capital partner. You do all the legwork and all the work, and then you get the rest of the return. Or maybe you work a partnership out where you're splitting the return, whatever that may be. But a lot of my investors, I would say I have at least 30 or 40 investors who had started off with no capital of their own. They networked, got family members and friends whom trusted them and who they knew had money maybe making 1 or 2% and gave them a much better return, and at the same time got into real estate investing on their own. I hope I explained that in a way that's understandable. If not, you can ask more questions. I'd be happier to go deeper into it.
And I completely agree, because I've heard a lot of people, actually at the last REIA meeting, somebody said, well, I don't have any money, so this doesn't apply to me. I said, yes, but you have to think about the fact that you're not necessarily looking for money, you're looking for capital. And capital could be any form. You could have financial capital, but you can also have human capital. When I started investing in real estate, the first properties that I bought, I had to borrow money from my cousin to get started. And then those properties had equity in them, then I pulled out the equity to continue. And some of the relationships and deals that I was able to do subsequently was because of my involvement with other people at different clubs, at the real estate club. So what I say to people is, if you don't have money, then maybe the first task that you need to do is to increase your connectedness with other people. If maybe you don't think your friends have it or family has it, start to network with other real estate investors. I guarantee you that sooner or later, you're going to run into somebody who has money but does not have time. I actually had a client that I have to give a referral because they have the money, they don't have time. And I have clients who have the time but they don't have the money, and you can make the connection. So having money or not having money or credit is not an excuse not to invest in real estate. You just need to JV with the right people.
Yes.
TJ, I think Brian said he was actually asking about lender referral when you were talking about 4 units. So I guess we'll just ask him to contact you. And we have TJ's contact information showing up on the screen. We have mine as well. We offer a free initial consultation. So if we don't get to your question tonight, or you feel it's more personal and confidential in nature, please give us a call or give TJ a call, and we'd like to talk to you outside of the call. Hold on, I have more questions here. We live paycheck to paycheck, and we need additional income. So, TJ, that's your baby.
Yeah, that's the pretty much a very similar response to what I just said. I don't recommend this one, but I've also had investors use credit cards. I really don't recommend that due to the fact that you want to have. I really won't I won't work with an investor who doesn't have enough capital in case something goes wrong. I mean, this is real estate investing. If it were 100% foolproof, everybody would do it. Would you agree with that, Abir?
Yes.
And so, there's always the potential for something to go wrong. So any investor that doesn't have the cushion for maybe a little something to go wrong, I won't work with. So someone who's just maxing out credit cards to invest, I'm not very fond of that. But it's a similar situation. You're living paycheck to paycheck cash-wise, but you're not living paycheck to paycheck time and network-wise. And it's those people that hit the ground running, that build relationships, that educate themselves on a market and a strategy and present that to other people. Those are the people that are successful. There's a reason that only 3% of America own a property other than their primary residence. And that's because only 3% of America is willing to step outside of their comfort zone and go and talk to somebody and really spend the time and effort to educate themselves and dedicate themselves to doing that. All you really have to do is become somewhat educated, get them to me, and I'll do the rest. We can do conference calls. I'll also educate you and train you on how to present yourself to people. No fee, just a relationship building process. But you have to be willing to input the time and energy to do that.
Yeah, I see a lot of questions coming through for that. The other lady said, I know real estate investment is an answer, but where and how can I get the funds to start? Like I said, if you don't have the funds to start, then that's not even your starting point. Your starting point is not to find the money. Your starting point would be to find the people. And
Yes.
if for some reason the circles that you're hanging around, is not giving you the people that you need, then you need to start changing your circles or start hanging around different circles. Let me tell you a little secret. I never knew that I would be doing what I was doing today, working for the largest real estate investor in the area. But once I started changing my circle, started coming to the D.C. area and meeting other like-minded real estate investors like myself, I felt like I came home. Finally, I can work with people who can relate and understand exactly, what I'm dealing with and what I'm going through. And as a CPA, appreciate the services that I'm able to bring. So you need to change your environment. Find other networking groups. Attend as many real estate investment clubs as you can and start to build relationships. Sometimes it may take you a year or 2 or 3 to build a relationship. But once that person trusts you, you may not have a problem getting $50,000 or $100,000 from them to do a JV. And I've seen this over and over again.
Me too, Abir. Me too. And I see a lot of JVs where people are joining up with other people's self-directed IRAs. I'm guiding them to ask the right people, what are they doing with the retirement funds? And a lot of people are using the self-directed IRAs as a way to invest with us here in Pittsburgh. Another thing is don't just go to the real estate investment meetings. Look for your meetings. There's I'm trying to think what it's called now. Meetup.com, and there's local business meetings. What you want to do is you want to find local meetings where you have doctors and dentists and other people like that going to just to network, but they're not necessarily in the real estate market. You can come there and you can educate them on real estate, and you can be that source at the meeting. There could be hundreds and hundreds of thousands of dollars there for you to capitalize on. And for them, but it's not just a benefit for you. That's the beautiful thing, right, Abir? It's a benefit for them also.
Yeah. Yes. When I did my first set of property, but the second set of properties that I did, most of the people that invested with me were not even real estate investors. These are family, friends, coworkers that I've developed a relationship with over the years. That even after I left the job, I kept in touch. And when it was time to form this JV, I contacted them and they invested. So I see a note here from, somebody saying I tried that, but I don't know people who have money that way. In that case, you need to change who you're hanging around. You need to start attending other networking groups. I cannot overemphasize that. The reason why you're on this call today is because TJ lives all the way in Pennsylvania, but he went out of his comfort zone to attend the real estate club in Virginia, the capital area. I'm all the way in PG County. Maryland, and I had to go out of my way to go to the capital area in Virginia. Guess where I met TJ? We met at the capital area, and it feels like we've known each other for a lifetime.
Yep.
There's a lot of benefit. And that's how we got talking. You know, he started talking about investing in Pittsburgh. I'm like, I invest in Pittsburgh too, and you know, we did very well, and we met just by going to an area that is not in either of our states. So I'm encouraging you that you have to step out of your comfort zone, and please give me a call. You know, set up an appointment. Let's talk. You know, I don't want anybody to feel that this is not doable, because I know it is. You know, I know it is. So if you feel like you've tried is not working, you can give me a call. You can give TJ a call, and we can assist you and give you some guidance on what you need to do.
And guys, let me encourage you. My father and I, you know, we own over 70 of our own investment units. They're not all in our name. We own units in my cousin's name. We own my grandparents, my wife, my father's wife. Basically, any friend or family member that wanted to make money, we would pay, and this is when, you know, there's different ways to use credit and capital, but we would pay people anywhere from $500 to $3,000 just to use their credit. So you don't always have to be looking for cash. You can also look for credit. It's getting a little bit harder in today's market to invest using credit, but it's still possible. So you also can be looking for credit investors.
All right, I have the person that you asked where they live. They actually lived in Hopkinton, New York.
Okay. Well, I attend the Long Island RIA. I may have met you there. But the Long Island RIA is a very, very proactive RIA. I've been a vendor member there for about 4 years, 3.5, 4 years now. There's also another RIA in Long Island run by, it's called REIEC. You go to www.reiec.com. You can go to Google and type in real estate investment meetings in New York, and there are quite a few. You can do that any city you're in, any country you're in. I know there's several real estate investment meetings in Australia, California. They're just all over. I mean, you just have to look for them. You may have to travel a little bit, like Ecere said. Me personally, I go to Long Island once a month at least. I go to D.C. once a month on average. I go to New Jersey. I go to California from time to time. I've been down to Florida. I go to real estate investment meetings all over. Just to pair up with what Ecere said, it's all about getting outside of the comfort zone. I'm not saying you have to go that far, but one of the reasons that I am successful in this business, my father and I, and we've been around for so long, is that we travel. We travel outside of our comfort zone. We travel to other areas. A lot of people who do what we do just stay where they are and maybe try to work all on the internet or don't really do anything. One of the big things that Ecere does is Ecere does a ton on the internet. She's very proactive in that way. It's time consuming. It costs money. But because she does that, she continues to thrive and be successful. So there's a lot of different ways to get out there. You just got to be willing to take those steps. And if you want to call myself or Ecere, we'll be more willing to you could share more of your personal story with us, and we can kind of try to talk to you more geared towards your personal story.
All right, we're going to be winding down here in the next couple of minutes. Also wanted to encourage you all. I joined biggerpockets.com, so you may not have heard about Bigger Pockets. So it's a very, very good place. It's like a social networking site for real estate investors. So just like you have Facebook and everybody is on there, Bigger Pockets is strictly for real estate investors. So you can go there and register and start to network with other people. I mean, I'm a contributor there. I write articles there. I answer questions. I post blogs. I've met people there. So, you want to continue to increase your network. And next month, I'm actually going out to New York to speak. There's another RIA that's going to be coming up in Manhattan. I'm going to be in New York speaking. We want to be out there. If what you're looking for, you're not necessarily finding in your own backyard, go somewhere else. I mean, even though I invest in here in Maryland, But I also have properties across the 5 states because, like I said, Pittsburgh is the one that's given me the most return for my investment. I also invested in North Carolina, in New York as well, in Pennsylvania. So you have to be willing to step out of your comfort zone to be able to get to where you want to go. So we're going to take this last comment. This says, yes, TJ, I met you at the Long Island RIA last year. I'll call you tomorrow. And what website was that again? It's biggerpockets.com. BIGGERPOCKETS. So Bigger Pockets. You have deep pockets. You have biggerpockets.com. And you can become a member, and you can start following people. So please be sure to follow me on Bigger Pockets. I am on Bigger Pockets. And you can also have people following you. So it's just the same way Facebook works. But the advantage of it is you actually get an education in real estate. They have thousands and thousands of articles, thousands and thousands of forums on there that you can be part of and get a lot of your questions answered. And you never know, you might be able to connect with 1 or 2 people there who may be able to assist. So as we start to wind down, we have about a minute more. Does anybody have any questions that is live you want to ask it over the phone? Okay, so it looks like we're done here. So, TJ, I'll just let you wrap up, and then we will go ahead and call it a day. Like I said, we do this every month. We're going to be here again in February. We're going to have a topic. Each month we're going to have a topic that we know will be of interest to you. And if there's anything that you want to discuss or talk about that you want to see on the webinar, please feel free to ask me about it. And you can go to my website, thewealthbuildingcpa.com, and you can listen to any of our prior webinars. We've talked about so many things in the last 6-7 months that we started. All right, TJ, go ahead and take it away.
Well, guys, once again, just want to thank you for the time. Bear, once again, incredible. I enjoy doing these with you and the time we get to spend together. I do want to give a little plug. I hope if you're in New York, you go to the New York City RIA to see Bear speak. When will that be, Bear?
Yeah, I think it's the New York City RIA. Yeah, it's going to be in Manhattan on February 8th.
February 8th.
Hi, Agnes. It's Adrienne.
Hi, Adrienne.
Good. I just got your message. I didn't know you spoke to her. I didn't understand that, so that's okay.
Okay, I'm sorry. I think that was an interference.
That's okay. Yes, I used to be a vendor member at the New York City RIA. It's a very proactive, very high-intense RIA. Teresa Martin is a great woman, a real estate investor, attorney, and very powerful speaker also. She's the president of that RIA. I want to thank everybody for your time. We hope we educated you a bit. And I would like to get to know you more. We do monthly tours here in Pittsburgh. Our next monthly tour is February 15th. You can email me or call me if you want details of what it's going to take to join that tour. During that time, we really educate you on Pittsburgh, on real estate, and on our company. I'm looking at an article right now that just came out 2 weeks ago by MSN. They ranked the 5 best housing markets for 2012. And guess why I brought it up? Because Pittsburgh's on there amongst the top. So, we'd really like to get to know you and help you be able to get some tax deductions through real estate. And I do recommend using a CPA who's very educated in real estate investing, and Bear happens to be one. So I definitely recommend Bear. Thank you very much. God bless.
Thank you, TJ. I really, really love these times that we spent together just bringing education to the real estate investor community. And like I said, it's just amazing. I think it's God's providence and divine destiny how we met at a RIA that is not in any of the states that either of us are in. It's just been a wonderful experience. And I'd like to encourage you guys. I just gave you the website to Bigger Pockets. I gave you TJ's number and my number. Please feel free to give us a call. And we offer initial consultations. We don't charge you for an initial consultation. And like I said, if you have any questions, please don't feel that you have to be my client for me to get the question answered, because I like to learn. as well. So if you have any questions out there, I don't want to be like any of these gurus, that go around selling all these real estate courses and then you can't have access to them. We want to be authentic. We want to be true. We want you to succeed. We want to help you in your wealth building plan. So at this point, we will go ahead and conclude this section. And God bless you and have a great rest of the evening.
See you later, Bear.